Hi there, welcome to Kneppy Invest and welcome to June 27, 2024. And we have 1 hour left of trading today, 1 hour and 1 day left of trading this week, this month, and this financial year. It just dawned on me that tomorrow is the end of the financial year when it comes to the stock market. So that's very exciting. And that probably means I will do a video dedicated to the performance of my portfolios and also your portfolio that has been running for about 3 years now. And unfortunately, it's not going to be a pretty picture. Now, the agenda for today's video, I have a fair bit to talk about, and we'll start off after this intro talking about the CPI numbers that were released yesterday. Also have a look at a few tweets and also have a look at the ABS CPI website or article, whatever you want to call it, because they were interesting numbers. And one of the reasons I think the market might be down today is because of a lag effect from the numbers and the increased possibility that interest rates will rise, because I don't understand why the market is down today when the overseas markets were up. Well, the American markets were up anyway, but we were down on open by about 1.2%, which was quite bizarre. So I'll talk about that, and then we'll have a look at the ASX Today, do the usual stuff, look at the best and worst performing sectors, indices, and companies, and then then I'll talk about or discuss a question that was raised. I think it was the last question that was given to me, and that was not that long ago. And then I might discuss two companies that released their Appendix 4C or their results. Both of these companies are agricultural companies to do with cotton and rice. And then we'll get into the top 5 announcements of the day. Now, I have cheated a little bit here because two of the companies did not release any announcements, but the share price of both these companies have even fallen or risen because of a broker downgrade or a recommendation from a service. And I'll discuss these two companies when it gets to the top 5 announcements of the day. Then I'll have a look at some charts because I did make 2 purchases today, and I'll discuss those purchases when we look at the charts. And that should be the end of the video. So let's get stuck straight into it. Looking at the CPI numbers that were released yesterday. Now, funny enough, I completely missed this, and I didn't really see a reaction from the market. But then I delved a little bit deeper, and you definitely saw a bit of reaction from the market. And that's today. So you can just see here, the market panicked on open. A lot of selling in the first 30 minutes of trading today, and we have seen a nice bounce. In fact, this little breakout indicator is saying the ASX is breaking out on the 1 minute time period. Don't know about that. I probably would ignore that. But if I'll go back to 1 minute and actually look at yesterday. You can see right on 11:30 a little bit of a dip. That's right on 11:30 when the CPI numbers were released. Now, we have seen in the news that the CPI was a little bit more or higher than expected. And I would have expected, using the same word in this almost the same sentence, I would have anticipated the market to sell off a little bit more if it was that unexpected. And we didn't really see that, did we? So was this a surprise? I don't know. Bond yields have risen significantly, I believe. I could be actually absolutely wrong with that, but I'm pretty sure I did see something in regards to bond yield rising. Oh, we got the wrong date there. Yeah, they did. Yeah, they did rise a lot, didn't they? Yesterday, they rose 5%. This is the Australian government 10-year yield. So rose about 5% yesterday. And that was, well, I suppose the American bonds also rose. I doubt they rose because of us. But anyway, we did see the bond yields rise yesterday, which is sort of an indication that the bond market is expecting possibility of interest rates rises in the future. Now, in my opinion, raising interest rates would be an absolutely bad decision from the Reserve Bank. I think it would be disastrous. And I think if they do that, it would put us into a recession. Now, unfortunately, CPI numbers, let's have a look at CPI numbers. So monthly CPI indicator rose 4% in the 12 months to May, and this was higher than expected. And if you go through, so March to March was 3.5, April 3.6, May to May, so we're talking about May 2023 to May 2024, up to 4. And if you look at the breakdown, it's not really food, although there is a bit of an increase in food. Tobacco, 13.4%, but I won't complain about that. But when you go down and look at the major contributors, they do actually mention it here: housing, food and non-alcoholic beverages, transport, and alcohol and tobacco. But some of the other big contributors include rent, which is housing, but also automotive fuel, up 9.3%. And I think there has to be questions asked about this, because let's have a look at oil right now. So oil is not doing anything. This is oil. Over the past year, oil has gone nowhere. So why has oil or petrol increased significantly in the past year? These are questions that need to be asked by the government instead of piling it all on the supermarkets. That's just my opinion. And I've actually stated this before. I think there should be an investigation into the oil industry, because oil's gone nowhere. Price of oil's gone nowhere. So why have the costs increased? And that's their excuse to why petrol prices have risen, is because costs have increased. Well, oil hasn't increased, so where are these costs coming from? I like that to be answered. I don't care about the supermarkets. They're focusing on the wrong thing. The other one was insurance and financial services, up 7.8%, a little bit down from last month, but still, insurance needs to be asked, why are you raising your premiums? Because you're doing really, really well. I understand the main objective is to increase the profits for the shareholders, but questions have to be asked, in my opinion. I haven't really gone through the rest of this, but I did see an interesting tweet. You can go through this if you want, because they go through every single factor here. Do they have a monthly one? I want to see if there's a monthly one, because no, I want to see if there's a monthly one. There was a really interesting tweet that said the first 4 months in this particular 12-month period, so we're talking about June, July, August, and September of last year, equated to about 2 to 2.5% of that 4%. So once we unwind these next 4 months, CPI numbers might fall significantly. So I hope the Reserve Bank doesn't increase interest rates just because of what they saw here. I'm pretty sure they're smart enough to realize that, but we have seen on occasion the Reserve Bank do silly things. So let's have a look at some tweets. Okay, so this is from Shane Oliver. Australian money market is now pricing in a 78% chance of a 0.25% hike by November. Big reversal from early this year when nearly 3 cuts were priced in, as the monthly CPI indicator was surprising on the downside, and nearly 7 cuts were priced in for the Fed this year. And it's interesting that the share market hasn't responded to this. You would think if these expectations really saw a rally or helped to rally in the share market early in the year, why haven't we seen the market drop? I don't know. Warren Hogan, I'm pretty sure I'm pretty sure Warren Hogan, the Australian macroeconomist, property and financial market, he has something to do with Judo Capital, Judo Bank, I believe. And he's someone who has forecast that we are going to see 3 interest rate rises within the next year or something like that. So bond market massacre. RBA can't walk away from this CPI result. Inflation picking up from above target. Markets need to think about the right level of cash rate to restore price stability, probably around 5%. Again, I think if interest rates rise to 5%, we will go into a serious recession. So there is a balancing job here. This one's an interesting one. I like this one from Alex Stepp. Nothing to do with interest rates, but the case for nuclear power in one chart. And there were some other comments saying, well, you've got this completely wrong. So it's not that simple to say that the fuel energy density of uranium is really efficient, because some people had some counter arguments. There was one here. Yeah, the worldwide energy prices over the last decade, generation costs in cents, based off or by all these different methods, and nuclear is the worst. And solar has been improving through time, and wind is the best. So wind and solar are the best, followed by gas, then coal, and nuclear is the worst. So a lot of differing opinions when it comes to nuclear, and I still believe that we have to focus for the long term on any sort of natural way to get energy, not by burning anything. Anyway, let the sun burn its fuel, which is going to be burning for the next quite a few billion years and harness that energy. That's what we should be doing. Harnessing the energy that is all around us, not creating or burning stuff to create that energy. It just makes more sense. And eventually we're going to get there, but we'll get there, but I'm not sure about the timeline. And that I am in the any else here? No, no video. I won't talk about that. Here's one. Oh yeah, so the CPI was expected to be 3.8, and it was 4, so it's a little bit higher than expected. That's okay. This could be a little bit of a bit before we start to see it go down again. Wouldn't be surprised to see it go down again. And then we get all these tweets saying the RBI is going to hike interest rates at the next meeting. Yeah, so increasing chances of RBA hikes or interest rates hiking. So that's the tweets in the monthly CPI. I didn't bookmark that tweet in regards to, well, those first 4 months in that 12-month period are pretty high. I was talking about 0.6% in the month. So more than likely, after about September, we're going to see CPI drop, possibly to around 3% or even below 3%. I was trying to find the monthly ones here. I did a monthly overview table. Oh, this could be it. This could be it. Oh no, that's the. I wanted the individual months. Yeah, that's not what I want. Anyway, detailed monthly data. No, anyway, trust me on that, which is probably not the right thing to say. So next thing I want to talk about is the ASX Today. So let's have a look. And yeah, it's been, I wouldn't say a bloodbath, but not the best day on the markets. However, if you are highly invested in tech and mining, you've done okay, relatively speaking. So let's have a look at the best performing sectors and indices. And IT, best performing sector. In fact, it's up 0.16%. So obviously, a company like WiseTech, maybe Aristocrat or RIO Group, has had an okay day. And real estate down 2.6%. Not surprising because of the relationship between real estate and interest rates. But not only that, if you have a look at the worst performing companies on the ASX Today by market cap, a lot of these are going to be real estate companies because they went ex-dividend today. Yes, they went ex-dividend. I'm not sure if that is factored in to the worst performing sectors. That should be added back, in my opinion. Industrials, financials, and utilities all down around about 1%. And gold down. Yeah, gold down. Any indices up? Maybe IT, something to do with IT is up. There is IT sector is up. And the worst performing sector, REITs down 2.64%. Real estate sector down 2.54%. Industrials down 1.29%. So let's go back to the ASX 20. I just want to see, ASX 20 is down almost 1%. So obviously the banks are down. I'm going to say this. Goodman Group's down. So I'm going to say 2 companies are up, 18 down. And the only 2 companies up, REA Group and WiseTech. 2 up. Well, close. I just want to get this right. One day, I just want to get it right. So 3 up, 17 down. And let's have a look. There's WiseTech. Oh, Rio Tinto and Fortescue both up. Okay, so iron ore has had an okay day. Where's BHP? It's not down. Oh, it's down a little bit, but not all that much. So yeah, WiseTech is the best performing company in the ASX 20. And REA Group, nowhere to be seen. In fact, well, I suppose that's maybe to do with real estate, isn't it? So it's tech, but also real estate. Yeah. So down 1.37%. And naturally, the worst performing companies, well, Transurban went ex-dividend. I do know that. And insurance company, Aristocrat, REA Group, Westpac, National Australia Bank, Commonwealth Bank, and ANZ all together there. Okay, so interesting day when it comes to the market. And let's have a look at the best performing companies. And I'm pretty sure we'll see, hopefully we'll see my top 2 announcements of the day. Well, it's not Iris Metals. I've never heard of that company. It's not Bella Vista Resources. Never heard of that company. I have heard of Harvest Technology, and they did release an announcement today. So, and it didn't really float my boat when I read it. So let's just open up and have a look at Harvest Technology. Small company, market cap is $17 million, and deployment of 30 more NSI units to defense contractor. Okay, so maybe I can understand why the market's a little bit excited about that because it says defense contractor, deployment of 30 more units. But I don't think this company is even close to being operating cash flow positive. So HTG, let's just have a look at the chart and maybe the share price is breaking out. And the answer to that question is no, it's not. Still in a downtrend, no reason to be excited about Harvest Technology Group. I didn't even open up the announcement. So I mean, I'm being a little bit too harsh on the Harvest Group. And TGR, no, nothing here. I thought, oh, there it is, Baby Bunting. So Baby Bunting did release a trading update. And I saw they released a trading update. I went, oh, this is going to be a bloodbath. But no, up 17.4%. And yes, I read it and went, actually, I think the share price might go up today. And it does, up 17.4%. Big question is whether this is a breakout for Baby Bunting. And Baby Bunting, I'm giving away right now, is the top announcement of the day, or did give the top announcement of the day. Now, a company that didn't give an announcement, the share price is up 16.44%. And the reason this share price is up is because of a recommendation from Service. And I'm going to show you the email I got in regards to this recommendation. Yes, I do get emails from this recommendation place. I don't have to pay a cent. They just send out their emails to everyone. And this is a fairly popular recommendation site. And you always see whenever they recommend a company, the share price pops up. And that company is AML 3D, which I have talked about before on this channel. And the other company I thought might have been there is not. So let's have a look at companies by market cap. So Sayona Mining, so a few lithium. I wonder if lithium's had a bit of a bounce. A Baby Bunting, and there it is, Sheffield Resources, up 12.9%. They did release an announcement that I thought the share price would rally, and it has, 12.9%. However, in saying that, the share price of Sheffield Resources has been under stress the last few days, last few weeks. So have a look at the chart for that. And Actinogen is on the list again. That was in my top 5 announcements yesterday, I believe. Or was it? No, it didn't make it into my top 5, but I saw the announcement and went, oh, this company needs a little bit more research because it looked like share price was breaking out. And this is another good day for the company. Yeah, the chart looks pretty good, doesn't it? So two good days in a row, and you could have bought it 4.1 cents today. Now it's up to 4.8, and some really good volume coming in as well for that company. Now let's have a look at the worst performing companies. I'm just going down through this a little bit more. Nothing else that fancies me. So let's have a look at the worst performing companies. And you'll notice when we look this by market cap, they're mostly real estate companies. So by percentage change, we have a few companies here on low volume. However, Melbana Energy isn't. I'm pretty sure I've talked about this previously. And Immutep is not as well. Okay, I missed this one. However, I did see an announcement from this company, and their share price is down 23%. So I probably should talk about Immutep, and then I'll have a look at the Melbana as well. Otherwise, nothing. Aurora Labs, they did release an announcement yesterday. Pretty sure Aurora Labs was on my top 3, or number 4 yesterday. Share price has pulled back. And East 33 did make it in my top 5, down 15.4%. However, fairly low volume. But I want to talk about that company because I've never looked at East. Well, I have looked at the company before, but I don't think I've ever talked about it. But it is an interesting company because of what they do. So look forward to East 33, and you might be surprised if you have no idea what the company does by what they do, or try doing. Now, let's just have a look at Melbana, because they did release an announcement recently, something to do with his Block 9, and they did release an announcment today, Block 9 Alameda appraisal update. The market has not liked it, but they released 11:32. That's why I missed it. So let's have a look at May's chart. Just want to see if, because I'm pretty sure I discussed this recently. And I probably discussed this because the share price plunged. On the 18th of June, fell 31.8%, and it's done that. Wow, look at the volatility in the share price. Why would you be buying the last 2 days? Share price went up 27.1% yesterday, and now it's down 42.6% today. This is ridiculous. Volatility in this company has been absurd since August last year. And share price is in a downtrend. I don't understand some investors. So that's Melbana. And is that all I want to talk about? Yeah, for now. Oh, Imitep. That's right, Imitep. So I actually did see this company release an announcement today, and I thought it had potential to move, but I didn't know by how much. So down 21.4%. The announcement today was positive top-line results from PH2B in head and neck cancer. I actually did read it, and it sounds positive because it's got the word positive in it, right? But I did see something in there that did make me a little bit wary. I can't. I'm seeing if I can remember. Based on the positive top-line results, the company will discuss the path forward with regulatory agencies. That wasn't it. I'm pretty sure I did see something that I was like, oh, is this as positive as I think it will be? And I probably won't be able to find it now. So there's, yeah, I can't remember now. It was too long ago, and I was not convinced. I was not. What's the word? Low conviction on which way the share price of this company was going to move based off this, because I did read something and went, oh, is this not as good as it seems? Thought it had something to do with that one, that fifth point down here. But anyway, let's have a look at the chart for this one, because there has been some interest in this company in the past, just based off the chart. I have no idea what this company does, healthcare company. And you can see the share price in a nice little uptrend. I'm going to get rid of this breakout. So there has been interest in this company because share price was in a nice little uptrend. Today, share price at one point today was down to 23 cents. So there has been a rally. So that means the share price was down probably about almost 50% today at one point. So the market doesn't like something in there, even though it says positive, and that reads as a positive announcement. So this could be the dagger to Imitep's uptrend. It could be, but we'll have to wait and see, because there has been some nice buying coming in. Let's have a look at the 1 minute chart for Imitep. And yeah, so it wasn't initial selling on open. The selling really intensified in the first 30 minutes of trading. Share price went from 39 cents all the way down to 23 cents. So I'm feeling there might have been some day traders got caught here, and then a nice V-shaped recovery, and then share price going sideways, which is probably fair enough. So V-shaped recovery, share price going sideways, somewhere in between the bottom and the top of the share price today. So that's Imitep, a company I don't know much about, but the market cap of the company is quite high, $530 million. So the market does like this company, but at this point in time, after looking like it was in a nice little uptrend, this could be the end of the uptrend for Imitep. Okay, so let's get to a couple of announcements released by companies. So the first one was Namoi Cotton. Namoi Cotton released their Appendix 4C, share price up 2.3%. So obviously their reporting period is a little bit different from most other companies because they had to release this Appendix 4C by the end of their quarter. So their quarter, instead of ending at the end of June, ended at the end of May. So you don't see many Appendix 4Cs or 5Bs released out of the 3-month period we typically see. This is one of the only ones, if I remember correctly. So here we go. Quarter ended 31st of May 2024. Once we start to see Appendix 4Cs and 5Bs being released starting next week, hopefully we might get one next week, we're going to see the quarter ended is the 30th of June 2024. So this is a cotton company. I'm not the biggest fan of agricultural companies because they are highly dependent on stuff that the farmer or the producer cannot control, particularly weather or even just bugs, diseases, that sort of thing. So receipts to customers, 65.4 million, and they're not profitable. Well, they're not cash flow positive. So operating cash flow burn of $10 million in the quarter, and free cash flow negative by 12.5 million. Now, this is just one quarter, means nothing. I'm pretty sure if you go to one of the other Appendix 4Cs, so let's go to the most recent Appendix 4C before this one, and we'll have the whole year data on this Appendix 4C. So if this was released at the end of June, we have to go to the end of March. There it is. And we get a better idea if maybe there is a bit of seasonality to this company. More than likely there is, right? You think so. And yeah, this probably shows it. $658 million of receipts in the year, only $8.3 million in this particular quarter. So if you have a look at the year to date, they actually were operating cash flow positive by $31.1 million and free cash flow positive by about $26 million. So you can't just look at one quarter. That's a lesson when it comes to these type of companies. You have to look at the whole picture. So don't look at one quarter. And I think understanding the seasonality of a company is quite important. It just makes sense that cotton would be seasonal. And the other company that did release results today is a company I have discussed before, a rice grower called Sunrice B, LTD vote. And the market likes this particular financial results from the company. So they released a preliminary final report and a report. What shall we open? I did not have a look at these results because they released these after open. I just knew they released it because I had a look at announcements that were released after I went away, and this was one of the announcements that caught my eye. So revenue, here we go. So we're going to have a very quick look at this. So revenue up 14.7% to $1.9 billion. This is a pretty big rice grower, Sunrice. You probably buy their product. Well, I shouldn't say you probably. You may buy their products on occasion, Sunrice products. I thought it was always Sunrice, as in rise, not rice. But I understand why they've gone Sunrice, because they're selling rice. Anyway, clever play on whatever you call that. Profitable, 68.2 million. Profit up 24.5%. And profit after tax attributable to B-class shareholders. This is a really weird structure, in my opinion, because you have the rice growers and shareholders, and the rice growers don't get the dividend. I forget. Anyway, and net tangible asset backing at 0.1, earnings per share at 97 cents, which means the company is trading on a PE ratio of just above 7. Based off that, and it's got 8.61 here. And let's have a look at the chart for both of these companies, Namoi. And I'm pretty sure Namoi has been going through a takeover bid something. You can just see that just by the chart. Numerous takeover bids that have been rising. So I'm not sure where it is right now. So I haven't really been following the story, but SGLLV, VR, whatever it's called, SGLLV, is that right? Yes. I'm pretty sure this chart looks okay. Yeah, this chart looks fine, doesn't it? This is a daily chart, looks fine. In the short term, even the weekly chart, well, big dip in the COVID-19. Well, no, that was December of 2019. What happened there? And since then, their share price has doubled. Okay. That's all I'm going to talk about when it comes to these two agricultural companies, rice and cotton. Now let's have a look at the top 5 announcements of the day, including a few companies that did not release announcements, but I was going to talk about this one as well. So before we have a look at the top 5 announcements, I just wanted to discuss this particular email I received. It was a free report from Under the Radar. So I get emails from these guys every single week. And for some reason, maybe because it's the end of the financial year, they decided to send me one of their reports for free, 14-page report. And I like this simply because it tells me what they invest in. Now, this is a small cap company, so they love small caps, 27% return in 12 months. So they do own, I think they do have their holdings somewhere here. So here it is, their portfolio. So I could just look at what they invest in and go, oh, okay, interesting. So ARN Media, no interest. Airtasker, no interest. Austal, Boom Logistics, company I've been following, looking at Caprol, Clover Corporation, no. Cooper Energy. So quite a few companies I would not invest in. Evolution Mining, it's not that small cap. Gale Pacific, no. Integrated Research. So we get to the first company that I do like. Kogan, Medical Developments, ugh. Omni Bridgeway, ugh. Pacific Group, I don't know much about Pacific Group. Isn't that a fund manager? Playside Studios, I like that company. Select Harvest, again, agriculture. I will trade that company, but Superloop, now we're talking. And Southern Cross Electrical Engineering, now we're talking. And they also have a gold ETF, so they must be fairly bullish on gold. So overall, up 27% in a year, which has beaten the small cap index. Is that right? Have they got it here? Yeah, here it is. So under the radar report portfolio up 27.3% compared to the XSO up 4.8%. 16 pages. They go through some of their holdings and why. It's interesting. They've got a position in City Chic, I think. Or they're saying it's a hold. I don't know. Oh, this is maybe just their coverage. Or they do own under the portfolio holds 30,000 gap above 4% of the total portfolio. Anyway. The head of investments is a guy called Richard Hemming, who used to be on, not Ausbiz The Call, used to be on Sky's Your Money, Your Call, but I have not seen him on Ausbiz The Call. So interesting email. So sometimes this time of year, I do get interesting emails. Another interesting email I did receive, which I'll talk about when we get to broker recommendation. So let's go back to the top 5 announcements of the day, starting with number 5. And now we can look at this email that I did receive from Next Investors. AL3 or AML3D, our tech pick of the year for 2024. The last time they picked a tech company or tech pick of the year was OneView in 2021. Apparently, OneView is up 510%. Now, I have had a look at this company in the past, and I don't care for it one little bit. So OneView Healthcare, so they recommended it somewhere in 2021. I'd say more than likely the share price went on a run. The reason the share price of this company is up because they recommended it. That's what I'm thinking right now. I would love to see when they recommended it, because at 2021, I've had a look at this company and it just does not excite me. So if you go back to 2021, I reckon this broking service, or this whatever service you want to call it, recommended on the 1st of February, or maybe it was the 12th of March, and the share price took off. And we have seen the same thing happen. I have seen the same thing happen with this, I don't know what you call it, brokering service, recommending service. They do send an email. This is a free service. I just get this in an email, and on occasion they will recommend a company, and you just see this company share price just pop up all the time. What a good way to make money. Just recommend a company and then take profits. I'm pretty sure that's not what they do, but anyway. So this company's popped up 16.44% just because they've recommended it. So yeah, that's it. That's the only reason why this company's share price is higher. Now, I have had a look at this company in the past. What's the ticker code? AL3. I'm pretty sure this is 3D printing. So I mentioned either in yesterday's video or the day before that this space is becoming a little bit hot. So Titomic, I think, is one of those companies. The other company was, what was it? Aurora Labs. That's it, Aurora Labs. And now AML3D. Now, we actually have to... So this is really big volume coming in. Now, one of the reasons why share price... there is one scenario when I see the share price rising that I will not think too highly of. And this is one of those situations. When I see the share price rallying like this on a huge volume, I will just completely ignore it, because I have seen this again in the past when a brokering firm, recommending firm, whatever you want to call it, service, recommends a company, share price pops up, and then that's it. You see very little follow through. So it wouldn't be surprising to see a bit of follow through here, just based off OneView, but it wouldn't be surprising to see the share price fall back from here. Because share price really not doing anything at this point in time, but pretty big volume coming in. It's just people who see this recommendation go, oh, I've got to buy some shares in this company, without even knowing what the company does. Anyway, the other thing I should just look at is, so there is a bit of interest in this space. I've mentioned that. And they run a grant. And the last thing I'm just going to look at is the most recent Appendix 4C. And I did this with Aurora Labs, I think, and it wasn't much. Or one of the other companies, it wasn't much. And so let's have a look at how much receipts this company has had in the past. Oh, it's much nicer. 1.8 million, 6.7 million for the first 9 months. And the company is on the brink of being operating cash flow and free cash flow positive. So I don't mind this. And I'm pretty sure I have done a standalone video on this company. I'm pretty sure, yeah, I'm pretty sure I have. AL3. Oh, what is it? AL3. What was it? What's it called? AML3D. AML3D. I've done 2 videos, standalone videos on this company, were published on the October 31st, 2023 and February 7, 2024. There you go. There you go. So that's coming in at number 5 on the top announcements of the day. It wasn't really an announcement, it's just an email I received. Now, coming in number 4 is another company uh, who saw the share price move because instead of a recommendation, this was a broker downgrade, and that's Harvey Norman. Share price yesterday dropped 8.3%. And yesterday's video, I was like, why has the share price dropped? No news. It was because of a broker downgrade. And I have to thank Ausbiz, who sent me an email in regards to this, not specifically to me, but in their end of day email, they just mentioned that Harvey Norman share price dropped 8.3% because of a broker downgrade. Now, I want to talk a little bit more about Harvey Norman because there was a question from Liam Jones talking about Harvey Norman and their property. So it's a pretty long question here. Wanted to hear your insight about the developments, and are there any negatives to this kind of news, or do you see Harvey Norman as a quality company? I don't consider Harvey Norman as a quality company, but they do own a lot of property, which is the crux of this sort of announcement. Now, this actually made me ponder a little bit because I've always known that Harvey Norman had a lot of property. They own their property, but does that mean it's a good investment? Now, the reason I really pondered about this was because over the past 5 years, I've had about 3 or 4 companies that I've owned who sold their property to lease it back. And the reason I pondered this is they are obviously doing that for a financial reason. What's the benefits of them doing that? And the benefits of them doing it is they can turn the money they get to receive from disposal of that property, and they could actually generate bigger returns off that money than the leases they have to pay back by selling the property. And the reason I really thought about that is because I was thinking, I could sell the house I live in right now, take the whatever it is, and it's going to be a fair bit of money, and I could invest that money and get really good returns and just rent out somewhere. And I could significantly get way more money from my investments than the rent I'd have to pay. And I thought about it and went, no, I like owning my own place. I just like not having to pay rent, not having to pay a mortgage. I just like it. So there is definitely an argument to, particularly if your investment style, you can get really good returns, beating the returns you get from property. That's the thing you have to look at, is whether I can generate better returns than property. So it comes back to return on equity. So these companies who dispose of their property, they decided to just lease back the property to run their business. They thought their return on equity from the cash they would deploy to grow their business would be greater than the property's return on equity. And to be honest with you, that's not that hard. And that's the reason why companies don't own their own property, because they can get better returns by not doing that. So Harvey Norman has gone in a different direction. They decide to buy the property. And you can actually see the difference between Harvey Norman and JB Hi-Fi. In fact, similar companies, right? Not only are they similar companies, so JB Hi-Fi has a markup of 7 billion. Harvey Norman has a markup of 5.7 billion. So fairly typical. But there's some big differences between these two companies. The first difference is if you look at the balance sheet for both these companies and go to the total equity, Harvey Norman has total equity of 4.5 billion. JB Hi-Fi has total equity of $1.5 billion. Why is there a big difference between the equity of Harvey Norman compared to JB Hi-Fi? Well, it's because of property. So $3 billion difference there. But if you go to return on equity, return equity for JB Hi-Fi is 33.8% compared to Harvey Norman return equity, which is only 16.1%. This is a 5-year average. And one of the reasons why JB Hi-Fi's return equity is higher is because they don't own their own property, which lowers their total equity. So they get a better return on their equity because it's much lower because they don't own their own property. And another reason why it's high is because the return on their property that Harvey Norman owns is much lower than JB Hi-Fi can do or generate because they don't own any property. They don't own their property. So there are advantages to owning your own property and disadvantages as well. I would never look at Harvey Norman and say, Well, they own their own property, so I think this company is cheap. So another way to look at that is price to book. So price to book for Harvey Norman is 1.17. Price to book of, and the reason that it's so low is because they own their own property. Price to book of JB Hi-Fi is 4.37. Now, the way I would look at both these companies is just by the price to book. You can even look at the price to equity, but let's have a look at the price to book history of Harvey Norman. Let's have a look. Here it is, price to book history of Harvey Norman. So the price to book history over the past 10 years for Harvey Norman ranges between 2.2 and about 1. In fact, when the price to book of Harvey Norman gets below 1, which sort of makes sense, when they're trading below the equity, that's the time to get interested in this company. That's when I would get interested in Harvey Norman, if I ever do. And right now it's at 1.17. So it's actually fairly close to 1. So I probably would say that Harvey Norman is looking at okay value right now. So I'm not sure what I was going to say there, but if you look at JB Hi-Fi, the price to book is 4.37. So the reason it's much higher than much larger than Harvey Norman is because they don't own their own property. So let's have a look at this company's price to book ratio history. And I'd say it ranges so it ranges between about 7 and about 2.5. 7 back in 2016 and 2.5 in 2019. And right now it's 4.37. So if I had to compare Harvey Norman to JB Hi-Fi, I'd probably say Harvey Norman is looking a little bit more attractive than JB Hi-Fi just based off their price to book. But I think you have to look at a little bit more than that. So just because Harvey Norman has a lot of property, owns their own property, is not necessarily a reason to be more excited about Harvey Norman than JB Hi-Fi. There are benefits to not owning your own property. That's why some companies actually sell their property and then lease it back because they believe they can generate better returns from the money they get from selling their property, which makes sense because they should be really good at generating really good returns on equity from that particular money. That's why JB Hi-Fi has better return on equity than Harvey Norman. They have a lot of money in their property. Another reason I'm not a big fan of Harvey Norman is because of Jerry Harvey. I'm the biggest fan of him. So that's hopefully that's all clear. Hopefully that's all clear for you, Liam Jones. But in saying all that, I'm a JB Hi-Fi shareholder. But if I had to choose between JB Hi-Fi right now and Harvey Norman, I might be swayed more towards Harvey Norman right now. By the way, let's have a look at the charts for both companies. So Harvey Norman, because that dropped yesterday, probably looking a little bit more attractive as well. Actually, another way you can just determine the quality of a company is just look at the weekly chart. So over time, actually, let's have a look at the monthly chart for Harvey Norman. So it's slowly going up, isn't it? Harvey Norman is just slowly going up. In this sort of company, I'd be probably waiting when the share price falls to a good value because you could have bought this company back in 2001 at $4 and share price right now is $4. So this is not the chart of a high quality company. It's an okay company. But compare that to JB Hi-Fi. And maybe one of the reasons why you're not getting a good return from Harvey Norman is because of property. Now compare that JB Hi-Fi. There's a massive difference between the two. So go back to 2004, just after they listed, you could have bought JB Hi-Fi at $2. Now it's $61. So there's a big difference between the two companies in terms of quality. And I believe one of the differences could be because of property. Now, don't really take what I said to the bank just there because I don't know both companies back to front. There could be other reasons why Harvey Norman has not performed nearly as well as JB Hi-Fi over the past 20 years. There could be some other reasons there, but this is a beautiful looking chart, beautiful looking monthly chart over the past 20 years. Harvey Norman is not a beautiful looking chart. And I would never describe Harvey Norman as high quality, but I could describe that, say that to JB Hi-Fi. So thank you, Liam Jones. Hopefully I'm clear about what I said. Coming in number 3, we have East 33, down 15.4% on a trading update. Just titled trading update. This is an oyster company. Do they grow oysters? Something? I don't know. the East 33 distribution business. So they do oysters. That's all I know, oysters. Dedicated to pioneering the world's best oyster culture by empowering the people behind it, caring for the places that support them. They grow some sort of oyster that is apparently good. I have no idea. Sydney rock oysters are extremely rare, natively thriving in just 41 locations on the East Coast. So let's eat them. Yeah. No, I'm being a bit cruel there. Again, this is an agricultural company. There's going to be, at times, problems that they can't really, maybe Black Swan. Ooh, they're located in Tuncurry. So it's just down the road from when I grew up. Foster Tuncurry. There you go. They have operations in Wallace Lake, Port Stephens, and then Canaan River. That's in my area. There you go. So farming, rain events and prevailing weather conditions have also impacted East 33's harvest profile over autumn and winter. And what did I say earlier about agricultural companies? Weather can affect the operations of these companies, and unless the owners of this company can control the weather, and they can't, then this will always be issue moving forward for East 33. That's all I'm going to say around this company. Increased focus on East 33's shucking capability. There was a really interesting photos I saw a few months ago in regards to child labour. Really sad photos, but these photos exist for the reason young children shucking oysters, 1900, we'll say 1900. Images. Yeah, these photos like this. Photos like this. This is young children shucking oysters back in 1909. So there's one guy went around taking photos of child labour. Here's another one. Oyster shuckers in 1911. Forget the guy's name. He should be recognised more. And this really ignited changes in labour. So, and it's needed. I mean, if you're 10 years old, you should not be shucking oysters. You should be growing up. I suppose you could say these kids grew up fairly quickly, but yeah, awful life for these kids. And that used to be the way it went, wasn't it? But times have changed, and now these little girls would not be shucking oysters. They'd probably be playing games. Anyway, bit of a detour there, but shucking. As soon as I saw that shucking, I went, oh yeah, that reminded me of these photos I saw a few months ago. But well done to that photographer who really raised that issue, who brought about change. What was I talking about? Oh, East 33, the chart for East 33. I assume this chart is not going to be looking fairly good. Not a monthly chart. Oh, the monthly chart looks absolutely ugly, doesn't it? Share price of this company has gone from 26 cents down to 1.1 cents. Are you interested in this company based off this chart? Hopefully the answer is no. There was something really bad here back in April 2022. The share price dropped 48% of one day, and the next day 46%, and then rebounded significantly the next 2 days. So some shenanigans happening in April 2022, and since then the share price has just gradually fallen. A company you would never want to own in your portfolio. That's East 33. Hopefully you do really well because you are based in Tuncurry. I did not know that until this video. So that's coming in number 3. Coming in number 2, we have Sheffield, and Sheffield Resources is up today, 12.9% on increased production and shipments and Thunderbird. I did not even open this particular announcement. Now, this surprised me a little bit because on the 29th of May, they released an announcement, production ramp up at Thunderbird, which probably implies that they're going to see increased production and shipments. But on the 29th of May, the share price of Sheffield Resources dropped 8%. Next day dropped 12.1%, then 6%, and then 12%. So let's have a look at the chart. So this is weird going on with Sheffield. I'm pretty sure they're mineral sands. I could be mistaken. And yeah, share price dropped. Dropped all the way into this purple box, which is a support zone, going all the way back to 2020. So nice little support area for Sheffield. It's bounced out of that today, but there has been a little bit of selling, which is understandable because all these shareholders who bought at higher prices have seen the opportunity to maybe take a smaller loss today. So a little bit of pressure on the share price and not a lot of volume either. that would be a little bit concerning. I would be selling if I was Sheffield Resources shareholder right now. So this is definitely not a breakout. This would not be an announcement to get excited about. I don't know why there was such a different reaction back in May compared to what happened today. Maybe the market was surprised about the numbers. Did they have any numbers in it? I mean, they implied this a month ago. My production, yeah, they got numbers here. So maybe you can work some mojo, do some numbers, and say, whoa, this company's producing a fair bit of cash. I have no idea. And it's a mining company, so I'll have I'm trying to pay less attention to mining companies and their announcements. I want something of substance when it comes to mining companies. And, well, that's not exactly true. One of the times I will buy and trade mining companies is when sentiment in the area or sector is at the absolute lowest. Like lithium is heading towards that, or iron ore back in 2016. I think even gold in 2015-16 as well. Sentiment in those, or uranium a few years ago, sentiment in those areas were absolutely shot. And finally, to the announcement of the day, and that's Baby Bunting. A little bit of surprise here when I open up the announcement. Share price up 18.2%. Trading update. And I'm expecting this to be absolutely ugly because we have seen a few retail companies release negative trading updates, particularly the lower quality retail companies, including City Chic, a few other ones, and Mosaic Brands, KMD Brands. So I'm expecting this because at this point in time, I think Baby Bunting as a lower quality retail company. So I expected this to be bad, but it wasn't. So comparable store sales only down 0.7%. And down 5.6% on previous corresponding period. But they reaffirmed financial year 24 pro forma profit. And in fact, they mentioned, the CEO mentioned, while it is early days, still early days, it is pleasing to see the impact of some of our strategic initiatives on our comparable sales performance over the past 8 weeks. So possibly things are moving in the right direction. They use the words favorably, improvement, benefits, new focus on new customer acquisition. So this actually announcement sounded really good. I was like, and you go further. So it sounded really good and the market likes it. So let's have a look at the chart. Is this a breakout for Baby Bunting? Is it time to get excited about this particular announcement? And this is sort of announcement where I could get excited about and I could take a position in the company. Unfortunately, when you look at the chart, I'm like, no. You can see some good volume coming in the last 2 days, loose lips. Yes, I believe that would be loose lips. And unfortunately, the share price had been in a downtrend because of a negative announcement released on the 9th of May, not that long ago. So possibly things are turning around for this company, but is it a little bit too early now for Baby Bunting? Maybe. Anyway, so that's coming in number 1. We have Baby Bunting. Now, a couple of charts, a couple of purchases I've made. First one is CSL. So I already own CSL. I think CSL is starting to look cheap in terms of P ratio, historical P ratio. It's looking really good. And the chart, I'm starting to think share price, so the chart's starting to look really good. So share price has recovered today. I bought it at $292. And I just wanted a little bit of a dip today. I got the dip, so I bought on the dip. And there is going to be a time when this becomes a screaming buy. Share price of CSL has gone sideways the last 4 years. This is a period during which time the company has grown. So the P ratio of this company has dropped during this period. And you want proof of that? Let's have a look at CSL PE ratio. It's going to probably make it fool me. I'm just assuming, by the way. So PE ratio right now is 38. I thought it was like 31. I'm pretty sure it's lower than that. That could be based off last year numbers, not including the previous 12 months. That's the problem with CSL, possibly. So ratios. So PE ratio is about 31, based off the last trailing 12 months, not 38. It's about 31. And historically, if you go back to around about 2019-20, PE ratio, and since then, PE ratio of this company has been as high as 50. So typically around about 40 to 50. But during 2014 to 2019, you can see the PE ratio climbing through time. So that was a time when this company saw financial expansion and also multiple expansion. People were more willing to pay a premium for CSL. And I think we're getting to that point again where it does look good value with the PE ratio about 31. So when I say 31, If you look at the trailing 12 months, just go to the income statement. Trailing 12 months, the profit was 2.47 billion, and the company has a markup of 141, so 2.4. Hopefully this we've got to work out. So let's have a look. Clear. So 141 price divided by 2.47. Well, that's not right. Did I get the right number there? I might not have got the right number. We've got the earnings per share at 5.1. Am I looking the right? Yes. Anyway, something's wrong there. I'm pretty sure the P ratio somewhere I looked at, and it was 31. Maybe it was ComSec. I should have done the calculations myself beforehand, shouldn't I? So summary, CSL says, ComSec says P ratio is 31.7. Trading View 37.6. So there's a few different numbers here, but I'm pretty sure the reason why ComSec might be a little bit lower is because it's looking at or includes the last half year. That's what I'm thinking. I could be a little bit wrong there. Got here that basic earnings per share is 7.9. So let's have a look. Let's do the calculations here. This is very exciting. 7.9. No, let's not do the calculations. Anyway, the main thing here is the share price is going sideways, has been going sideways. So we're going through a period where the company is growing. This company is growing, still growing, and we're seeing also multiple contraction. P ratio is falling. We have seen this time and time again with these companies. I'm pretty sure CSL has gone through this period before. In fact, let's have a look. Yep, it went through this exact same thing back in or between 2008 and 2012. Share price went nowhere during that 4-year period. And then look what happened. So I'm thinking this is what's happening now. And the expectations for growth in this company, some of these numbers, P ratio might be forward-looking as well. The 31 might be forward-looking. And the expectations of really good growth in the next financial year are pretty high for CSL. So I do think this is a possibility where we're going to see, and if it's not now, it's going to be soon, where we start to see the share price in an uptrend. And maybe now it is starting to see that. Maybe we're now starting to see share price move into an uptrend. That is why I've taken a position in CSL. And the other one was Premium. And I think, I was hoping we're going to see a breakout today. So I got in on the possibility of a breakout today. So about 50 cents, I think, something like 50 cents. And it's very close to a breakout. So this is what I'm looking at. I'm anticipating a breakout for Premium. Now, if share price is up when the overall market's down, that's actually a good sign moving forward for Premium. Now, on to the one question I just want to discuss, and this was from Swimming 11. Why is Rio $122 a share when company only valued at $44 billion, when BHP is valued at $200 billion and only 43 a share? Curious why there is such a difference. So obviously, Swimming 11 is inexperienced when it comes to investing on the stock market. Hopefully, most of you know the answer to this. And it all comes back to how many shares are on issue. That's the most important thing. So how do we get from share price to valuation? There's one missing link there. That's shares on issue. So let's go to, there's a few ways you can go to this. Let's go to market index. So BHP. So obviously BHP has more shares on issue. So let's have a look at the shares on issue. You can see this in the key information. So markup is 218 billion. Shares on issue is 5.1 billion. So what you do to get the markup is you times the share price by shares on issue. And it comes to 218 billion. It's that easy. So BHP has 5 billion shares on issue. Rio Tinto has significantly lower than that, less than that, fewer than that. Which is the right word? Fewer. Has significantly fewer than 5 billion. So I would say, just based off your comment, so Rio 122 shares, what's the markup? So Rio probably has about 300 million shares on issue. Right there. Did I say that right? Yeah, 300 million shares on issue. So let's go back to this. 300 million shares on issue. There we go. 371 million shares on issue. So BHP, 5 billion shares on issue. Rio Tinto, 371 million shares on issue. That's why Rio Tinto Even though the share price of Rio Tinto is greater than the share price of BHP, it has a lower market because shares on issue are much lower. So if you look, and you can actually have a breakdown. There we go. So there are many companies on this ASX. I'm trying to think of one that has a really low shares on issue. Clinuvel. Actually, no, I've got a good one. Corvest. I'm pretty sure this company has like 10 million shares on issue. Yeah, Corvest, 11.68 million shares on issue. Share price $8.76. Yet the markup is only 102. I'm trying to think of a company with a lot of shares on issue. Telstra has a lot, but maybe not as many as 5 billion. Oh, okay, I'm wrong. And Telstra has 11.6 billion shares on issue. But the share price is only $3.58. So some people, particularly those who are very inexperienced, would look at Corvest and say, why is Corvest more expensive than Telstra? Has a higher share price. But that's not how it works. It has to do with the markup and the shares on issue and the share price. You can't look at the share price of a company and compare it to another company and think one or the other is more expensive. You need more information. Okay, video has been going for exactly or just over 1 hour. That is all I have to say on in this video. Hopefully, if you have any questions, leave those questions in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.